I don't like to do backtesting. I have been very clear about it. I would rather take trades with very small position size, maybe cash, to validate something rather than just going back in history and trying to find out, because I have done it for a long time, and I cannot stand it. I meet people, many people come to me and they share their systems and this a combination of indicators and all those kinds of things. The moment they start talking about backtesting, I stop them. I tell them, you validate this to me logically, and then that is where everything falls apart, because they don't have any logic. It's just an observation. They what they feel is that they are the only ones who can find out some combination of RSI and stochastic and some moving averages. Like, people haven't done that already. Now the optimization softwares are so strong that they think that they can use, let's say, 17 period moving average and get some good trades. They believe they are the only ones doing that. The softwares can start from 1 and can go to 200, 500 in the increments of 1 and do all the back testing for you. So these optimizations, they are going to fail. And I personally believe that these algorithms, they are just there to find these optimization signals and then kill them. Because that is where these retail traders and these so-called high-tech people will run after, and they will kill it. They will kill it. But what cannot change is buying and selling. What cannot change is a position once in the markets. It will be recorded as volume, okay, even for that matter as open interest, right? So those trades are there. Once they are in the system, they are there. They are the truth. People have committed. Either they have bought or they have sold. They have committed to a direction. They have committed to a particular trade strategy. That is what is real, right? Everything else is just price is not. Many people, what they say is that price is in itself is not sufficient. You need to have volume. What the hell does volume mean? I mean, they look at the vertical volume, and how does that help them? God only knows. But obviously, I used it for a long time. But now I understand, like, volume, it's not how much trading was done in a minute or in an hour. It is how much trading is done at a price level, because that is the commitment of traders there. And obviously, let's say, if you look at this number, all right. For instance, let's say this represents 10,000 lots on Nifty. Just a random number, all right. 10,000 lots on Nifty. It clearly tells me that there are 10k buyers and there are 10k sellers. So there are people who believed selling here is a good idea. There are 10,000 lots of those, and there are 10,000 lots who believe that buying here is a good idea. Why they bought? Whether it was their stop loss, whether they wanted to get on with the trend, and all those things can be understood by looking at the context. Make sense? So when I look at this high and when I look at this, obviously people here who bought, they wanted to the markets to go higher, so they expected the markets to go higher, so they bought. And what happened? Market went lower. So who do you think is under pressure here? These buyers. All right, someone sold here and their stop loss is hit, so they are out of the system. But they are out of the system, but the market is not out of their system. All right, it's always there in their mind. So now they are in pain. The market is going lower. Now they are thinking, oh, if only I could have waited an hour or two, I would have gotten out at break even. And now if, let's say, the market falls, then they will beat themselves up even more. Then they will probably join somewhere here, and that maybe turn out to be the turning point again. So these indicators, these order books and all, what about people who have markets on their mind but they are not trading, or they are about to trade, or they are thinking about trading a particular instrument? How are you going to account for that? So this commitment of traders at particular points, this is what makes the market. This is what you should look at. So look at horizontal volume, forget about vertical volume. Stupidity.